Welcome everyone to Bitcoin Not Crypto. I'm joined by Scott Dedels, and today we're just going to talk about Bitcoin. I'm going to get some of your thoughts on a few different things here, Scott. But first, I wanted to get your story about what got you interested in Bitcoin to begin with.
I'm a Canadian. I spent the first part of the spring of 2020. I was at that time. I spent most of my career in traditional financial services, predominantly doing work with pension plans, group retirement savings plans, and health and dental plans. So like total compensation consulting, and that work has a lot to do with like meeting with executives and with their staff and helping them understand the different tools employers are providing to help them plan for the future and the assets that tend to make up a lot of those investments tend to be fixed income and things that are directly tied to interest rates and money printing. So I wasn't actually interested in Bitcoin when I found it. I was looking at trying to get a better understanding of like what was going to be the how would the markets react to what was an unprecedented amount of money creation that happened in the early part of 2020. My journey kind of went from university economics textbooks to Sound Money, Mises and Rothbard, and eventually I was by chance recommended Price of Tomorrow, which actually isn't even explicitly a Bitcoin book. So I read Price of Tomorrow, kind of got interested, and then I started reading Bitcoin books, and really went from there. It was it was very much for me something that was rooted first in Sound Money, and it's like I think people have their own Bitcoin origin stories. For me, the like aha that Bitcoin was just so much more than internet money. It really started with Sound Money principles and going from there.
This is really interesting because I think a lot of people have the same journey into Bitcoin, which it might not be so explicit and so understood, but like even my own, not coming from a background of finance, I came into some money and wanted to try to protect that money and started looking at inflation. And then inflation led me to debasement of currency. And I looked at, basically, I literally searched in AI, like, what kind of assets do well in an inflation environment, and it led me to real estate, scarce assets, gold, Bitcoin. Some people speculate on Bitcoin. I was like, okay, let's look deeper into this. I'd love to just go into some real basic stuff here, and maybe this will trigger the conversation to go into some interesting places. But you mentioned that you saw in 2020 some massive money creation happening. How does money get created, and why is that a bad thing? Why was that something you were interested in to begin with?
Basically, everybody who's participating in the employment market today has done so with the majority of their career happening kind of after 1971, and we've all been told this story that inflation is like a necessary process, or it's part of the natural lubrication of an economy. And so I don't think that we really tend to even question whether or not money creation is bad. This is just something that and then we're in. This is being recorded in the end of April, and we're in an election cycle in Canada right now. Same thing was true. There was brief moments in the U.S. election that happened last fall, but political candidates aren't drawing attention to the fact that any of the solutions that they're proposing likely involve further money creation or acceleration of the money creation. I think money, to answer the question truly, money's actually created in a few ways, and that this is actually part of the problem. So it is issued directly from central banks, but it also, as a result of the way fractional reserve lending works, commercial banks have the ability to create money out of thin air by lending money that they don't have. So they can lend out sort of 10 times the 10 times the value of the deposits that they have. And anytime like a mortgage is issued to fund the purchase of a house, that's money creation. And so money is continually created in a lot of ways. And one of the news stories I saw early in the kind of Elon Doge department stuff was the U.S. Federal government has 13 different departments that can essentially automatically sign off on any invoice of any amount, and which is also money creation, right? And so I think it's the nature of the beast is just that the system requires that more money is created all the time, and I have a few different minds that I'm still very interested in the subject. Peruvian Bull is probably my favorite sort of Bitcoin macro mind, who's talking a lot about some of the different problems that result from money creation, and these are things like something that is called Triffin's dilemma, which is an economic force that essentially forces the U.S. to print forever because there's a never-ending demand of dollars outside of U.S. borders. Dollar milkshake theory, which is another money printing concept that suggests fiat currencies will ultimately first collapse into the strongest fiat currency before all monies are printed out into oblivion. So that there are a lot of different, it's a big subject.
When money is printed, then when there's more supply, I mean, the way I think about it is it's simple supply and demand economics, right? So when something is added, this money is being printed up at near zero cost, basically zero for all we need to think about it, and then there's more of that being added, and that's diluting the current savers. So it really affects people that save in that currency. And it has all these knock-on effects as well, like trying to seek out assets to protect against that debasement of that currency that they hold. I'm also in Canada, so again, we've seen the knock-on effects of unaffordability for everything, but housing has been a specific, sore issue where a lot of people just use their house as a store of value, knowing or thinking that it will go up forever, at least with the amount of debasement. They might not directly correlate that, but that's basically what's been happening. So it has these knock-on effects of hurting savers, is the way I think about it. Is that, can we maybe expand on that? Do you have anything to add to that with the issues of money printing?
Yeah, for sure. I think that yes, it creates these sort of incentive mechanisms where people are finding places that they can put their money where they'll keep it safe. And real estate is such a great one of my favorite examples because it really does cause this sort of paradoxical problem where it simultaneously destroys quality of living and the sort of bedrock of functional society. Canada is a great example where the money, if you compare US and Canada, Canadian money has performed much more poorly as a store of value. And so relative to the United States, our house prices per, by metric, compared to how much people are earning, all of that stuff looks a lot worse. So like if you're looking at a house in Windsor, Ontario, and then looking at a house in Buffalo right across the border, yeah, they're like identical houses, and they could be like 3 or 4 times the cost. And I think that just says more about our money than anything. So yeah, I think it's a huge problem. I love this term Frankenstein asset, and it's basically it becomes a self-fulfilling prophecy because people who are investing in real estate, or up until I have my doubts about what's going to happen in real estate in Canada in the short term, but if you've been using that as your strategy or your store of value over the last 20 years, like you have been right. And it's one of those things where the more people do it, the faster it goes up. People are ultimately, I think, searching for the thing that is going up faster than this like abstract problem of understanding that the value of the unit of measurement is going down. And real estate has done a great job of that. The challenge is that because real estate is indivisible. So there is an upper ceiling on what the average person can pay, regardless of how many levers they want to pull around how small your deposit can be, or how long you can amortize the loan. There will be some kind of an upper ceiling. And so I think that Bitcoin presents a really great opportunity to demonetize real estate. And I hope it does. I'm a massive believer that there has to be some sort of a balance where real estate does protect your investment or like still incent someone to own it, but it can't be, the possibility of appreciation can't be the primary driver in trying to own real estate to me. And that's something that really the free market has to fix. But yeah, I mean, I think that ultimately, if we think about Bitcoin compared to real estate, the market, if you believe that the market is searching for the thing that is going up the fastest, then you can think about Bitcoin in two ways. One, just objectively on a percentage basis, Bitcoin has outperformed every other asset. And so, should it continue to do that, you would think it's just kind of a matter of time until enough people are convinced that it has the likelihood to continue to do that, that it will start to pull away real estate investors. And I really think it already has. I think that, because the second half of that argument is Bitcoin is a much simpler thing to invest in than real estate. Like, there are fewer tax events, there is no maintenance or upkeep, you don't need any tenants, there's no rezoning of your Bitcoin. So all of those things are more appetizing. And I think you put those things together because ultimately, if the market really just wants the thing that's going to go up the fastest, then Bitcoin actually is it's like a super streamlined, it's a piece of property that is indestructible, can be moved anywhere in the world. It's not just that you can measure its sort of finite properties and its scarce and sound money. It actually, if you could imagine what the easiest thing to be the most desirable type of investment would be, it actually would be Bitcoin, because you don't need to do anything with it other than keep it safe and have a growing number of people recognize that these same characteristics are valuable. And in that world, you're basically set up for owning the fastest horse in the race. Like, it'll be very difficult to create something that could be the type of investment that could outperform Bitcoin over a really long period of time, because it's actually hard to imagine. I can't even think of anything it's missing.
One way to look at it, or way to explain it, is there's sort of a monetary premium on housing because people are using it as like an investment or a speculative vehicle to save in. And there could be that being taken out if people do decide and continue to realize that Bitcoin is a better store of value, if that's what they're seeking. So they could move their assets into that and sell their real estate. But there's also sort of that thesis, which comes in with the price of tomorrow, which is that if you are saving in this deflationary money, or in an asset that's appreciating more than the value of the other goods, then real estate already is becoming cheaper if you're saving in Bitcoin, which is kind of an interesting concept, and maybe goes into the question and that we can talk about here, which is like, why would somebody want Bitcoin? What is the advantage to Bitcoin compared to these other assets? What do you think?
Yeah, I mean, and the stats on it are like, in the province of British Columbia, I think in 2016, a house was 600 Bitcoin, and today it's like 6 Bitcoin. So the price of real estate priced in Bitcoin over the last 9 or 10 years has gone down by 99%. And that's true of every asset, right? So gold, even in spite of the recent rip in the gold prices, like the price of gold is down 99% in Bitcoin terms over the last 10 years. And this is where, like, if you have something that's compounding at 40, 50, 60%, regardless of sort of the time frame you want to measure it on, it is outperforming everything on a sustained basis by so much that it is really demonetizing everything. And yeah, I mean, I think there's also never really been something like Bitcoin, in the sense of, the analogies can be tricky, but Michael Saylor, in comparing Bitcoin to real estate, would talk about how, if you could imagine instead everyone in the world being able to invest in the most desirable real estate neighborhood in the world. So his example is like Miami Beach. So, the average person can't invest in Miami Beach. And there's a good analogy, because there's only so much beachfront property on Miami Beach. So that is scarce, and it will always be scarce. Now, that is only accessible to people who can invest in the United States and probably live in the area, or have, all these other things. So if you could take that one thing in terms of its desirability, and now open up access to that to every person in the world, every company, every government, every pension, every endowment, and say that it is, divisible to a point where like any amount you can afford is accessible to you. Now you've really taken kind of the combination of the most valuable thing and made it is like to infinite demand. And to zoom out and like, how relevant is this? Every person, every business, every government, like they're all facing this problem of melting money. They're just facing it at a different level of urgency depending on where they live. But it's an urgent problem for everyone in the world. So I really think that like, inflation and currency debasement is and will come to be remembered as the problem of our time. We're at the end of a 50-year experiment in total fiat currency, which is like, this thing, it only has one ending. And so there's only one life raft. I think like there are other scarce assets and there are other forms of sound money. And this explains why people are also holding gold, and gold has been smart, but like, software has eaten everything except money, essentially, over the last 30, 40 years. And it makes sense that that too will be digitized. So I think that like that's the last sort of part of this like store of value argument, whether we're talking about real estate or collectibles, baseball cards, or gold, is like ultimately we're moving to a world where the premium will be having the ability to move it around the world, instantaneously, for it to be sort of as liquid or as available as anything else that exists in cyberspace. And so this is the sort of like the cherry on top of the Bitcoin argument, is like you're really talking about the apex asset for the information age. And this is how I can't imagine something coming along to outcompete it.
One thing that strikes me about Bitcoin compared to these other assets is that it's accessible by everybody, and therefore it has like a level playing field, and it feels very ethical compared to the restrictions that are enabled on even different currencies, different stocks, bonds, debt instruments, real estate. All this stuff has a lot more regulation, and just a lot more restrictions against it. So to me, I wonder how important, to me the ethics are very important about Bitcoin, and it seems very ethical to me. So I'd love to hear your perception of the ethics of Bitcoin.
I have immediately kind of two reactions to that. One would be, firstly, I think that people should have access to some sort of a tool that is actually an alternative to investing. And for me, that feels very fair. So we've really somehow over the last like 20 or 30 years fused the concepts of saving and gambling together. And so everybody has to gamble their life savings to be able to grow it into the future so that they think it will hopefully be worth more than it is now. And that's really what we consider as saving. And like not that long ago, people actually would have had a mix of baskets. You'd have like your checking account, you'd have like your investments, and you actually would have a saving. You would have a pile that you were just saving. And that part would have been, maybe on interest bearing instruments. So like really minimal risk stuff. And I truly believe that given the choice, most people's sort of general risk appetite would be to avoid the gambling altogether. And picking stocks is tricky. And the average person really shouldn't need to become a hedge fund manager or a day trader just so that they, after working, you need to then again earn your money all over again, trying to grow it so that you can just stay in front of this problem that were adopted into. Like nobody really chose this, and these are just natural reactions to people trying to solve an unsolvable problem. So that one thing I think has an unfairness, is unethical. People should be able to do nothing with their money. And if you go way back into periods of time where the money was a lot more sound, then people did just keep cash, or they would keep it under the mattress or keep it in a safe. You could keep cash when money was devaluing more slowly. And there's lots of information about, price index, like the price of a bottle of Coca-Cola didn't change for like 70 years between 1880 and 1960. Don't get me quoted on exactly the numbers, but there were long periods of time where the general price of stuff was pretty static. And in that time, you wouldn't have needed to gamble your money. And, I think going back even a little bit further, like the concept of ordinary people having access to investments is also something that's pretty new. And, 100 years ago, the average person, if they had any money left over, they would have probably just bought a gold coin, or like they would have just been able to buy some gold and store their money in precious metals. But nobody, there was no such thing as portfolio of stocks. Like this would have been something that was really for the wealthy and elite. And so I think that Bitcoin represents a democratization of fairness in allowing people an opportunity to opt out of the gambling. And that to me is very ethical, is very exciting. And saving in Bitcoin is the simplest thing you can do with your money. If you can study enough to arrive at a place of comfort where you understand conceptually what it is you're trying to do. It doesn't guarantee anything, but it does guarantee you the ability to put your money somewhere that has rules, and everyone who owns it sort of also understands and acknowledges those rules. And as a result of that, you can at least be sort of fairly certain that it's going to perform that's consistent in a way with the rest of the understanding of everyone else who's buying it too. So, and I expect that this is an idea that's going to really diffuse. Like, I think that, again, kind of getting back to what we were talking about earlier in the conversation, if what people are trying to do is protect the value of the time and energy that they spent to amass the money that they have, then Bitcoin is really an elegant solution for everybody anywhere in the world. And then the fact that it's also guarantees sort of property rights for those same people is also a very cool and ethical thing. It's owning and protecting physical property is something that people, billions of people around the world just aren't able to do, either because it's physically unsafe or where they live doesn't have the sort of infrastructure to make these things possible. And so I think that Bitcoin has, a lot of different ways that it can create abundance for people and transform the way societies work to make them more fair. The first part of the other thought I had when you asked that was, I do think that it is innately unethical that small groups of people are empowered to issue money for the rest of the population. And it is fair and true to say that vesting that power in the hands of a small group of people puts those people at a disproportionate advantage. And they do have then really a head start to collect assets and watch those assets appreciate in price in a way that makes them further out of reach for ordinary people. It really makes the game extremely unfair, and it makes the game harder and harder because those same people have a built-in incentive to continue the money printing over time. And so it's just a sort of a natural human reaction that that money eventually gets printed away to nothing as these people kind of helplessly do exactly what human nature would suggest they would do, which is continually choose what's best for them, and at the expense of everyone else. So, yeah.
Very well put. We have been talking about Bitcoin as a store of value, and I do want to just bring up some of the skepticism that maybe is common around the concept of it as a store of value. A lot of people look at gold or real estate as a store of value because it's pretty stable. It increases, but there's these wild volatility swings of Bitcoin's price when we price it in US dollars or fiat currency in general. Why can you just talk maybe on that aspect of it being a store of value, and how how does that connect with its volatility, with its price volatility?
There's a term in thermodynamics that's called entropy, and entropy in a chemical system is the amount of energy that is sort of wasted or that is not directed at the primary process that is intended. So it's the unavailable amount of energy that is useful. And so if we think about store of value, what we are really trying to store monetary energy, and the best store of value should be the thing that stores the most energy over time. So if we're thinking about real estate as a comparison, what would entropy, so when you turn a light bulb on, electrical energy is turned into light, and some entropy there would be when the light bulb gets hot, it's getting hot instead of it's producing light. And so some of that heat is energy that should have been directed at producing light for, so for people who are trying to, so if you're thinking about, real estate's not a straight line either. You need to replace the kitchen. You need to pay the property taxes. There are different events that you could consider as lost energy. And your hope is that the overall input at the end, you're going to get more than you put in, which has been mostly true. But if we're thinking about Bitcoin, because Bitcoin is basically like a giant balloon that, if you could imagine all the money in the world being air, and you've got like a giant leaf blower, and the balloon is like stuck on the end of this leaf blower. So there's an unlimited amount of air that can go in, and all that the Bitcoin needs to do is be able to expand. And the idea would be that this balloon can expand forever, right? Because it doesn't have to do anything. There is no maintenance and upkeep of required with storing Bitcoin. It doesn't degrade over time. There is no entropy in the system for two reasons. One, you can't send a Bitcoin off of the Bitcoin network. So it's a closed system, and there can never be any more Bitcoin issue than the 21 million max supply that can ever exist. So it's truly, it has like a fixed set of parameters. And because Bitcoin do get lost, they actually get rarer. They get rarer in two ways. One, by the declining rate of issuance, as there's fewer and fewer new Bitcoin that will be able to be mined. And by 2034, almost all the Bitcoin will almost be mined. And then on top of that, like, Bitcoin are still being lost all the time. So yeah, so I think that if you think about all of those things, the fact that Bitcoin doesn't corrode, like different precious metals, you need to think about how you're going to store them, transport them. You need to think about how they might age. Obviously, gold is like an immortal money. It's an indestructible money. So this is why it has been the most enduring and durable form of money in human history. But I think Bitcoin takes it one step further because it's non-physical, so that it is actually it's not really bound by the physical laws, other than kind of energy go in, and then we have this sort of like cyber balloon that is designed to preserve energy. So I think it's if I had to sum it up, I think about it in terms of entropy. So people who are thinking about Bitcoin as a store of value, and they're fixated on whether it's failed or succeeded as a store of value based on what its price in dollars has done, are really missing the point. Because what you're doing is you're transferring your money or your wealth from an open system to a closed system. And in the open system, there's entropy all over the place. Your actual money is degrading. Your money has a half-life in the open system. And it does that because, like in Canada, the M2 supply, this total supply of Canadian dollars, doubles roughly every 8 or 9 years. So it's actually difficult to even tell if you're winning when the numerator and the denominator and the fraction are changing all the time. Like, it's difficult to be objective and measure success. So open system, you move to a closed system. The price in dollars may change, and yeah, if you need to sell it back into dollars, then that's a real world decision for you. But if you bought one Bitcoin now, you know exactly as a percentage of the total Bitcoin available what that one Bitcoin will represent today, and it will mean the same thing in 5 years and in 50 years. So I think that, well, getting back to this idea that currency devaluation is the problem of our time, we're still just actually super early in terms of the number of people who have comprehended, one, that it is an actual problem, and two, that there is an entirely different system that is being erected in parallel right now in front of us. And so for me, it's really like it's Russian roulette on how long it's going to take for enough people to understand this all at once, and that's kind of when I think the whole thing gets when the game's over.
Yeah, I mean, just listening to you now, it just seems so obvious that this is something we need. The money supply that we all use day to day here in Canada, it doubles in every 8 years, roughly. That's insane, right? That seems like such a massive problem. And then there's this other solution that is this fixed rate. And once you comprehend the max supply and what that really means, and that there really is nothing else that exists like that, it just seems like, okay, this is where I need to save in. This is savings technology. This is incredibly useful. You mentioned there kind of that we're early, that people need to recognize and realize this. Why do you think that maybe is it taking a long time for people to recognize this, or why? What do people need to recognize here to be able to start understanding Bitcoin and going all in, or even just starting to learn about it?
I mean, I think that firstly, there are some significant obstacles that are being put in people's road by design. So the existing financial system is going to have a very difficult time functioning the way it does today in a sort of truly post-Bitcoin world. And that's because our entire system and the entire banking system is built on a ever-expanding, bubble of credit and debt. And they want everyone continually to get more and more into debt. And that's the yield that comes off of that debt, that you are the yield, and you are an essential ingredient in the next people coming behind you and being yield for you. And so I think that obviously financial media, the media is the people who have all the money today are the ones that get to decide what's on TV. And so this is why you still see the full spectrum of opinions about Bitcoin on mainstream TV, and it's potentially political suicide for politicians to be talking about it. So we're still very early in that sense, where I think like there is more than enough Bitcoin information available to anyone today who's willing to do their own work and draw their own conclusions. But I don't begrudge anyone who has a different idea, because it really is like a gauntlet of trying to find the signal amidst like all of the other noise. And I think too, there's also a strong component of spite, or people don't want to have been wrong about Bitcoin. Like it's a much easier idea for people to digest the possibility that like, oh yeah, a lot of people got lucky with Bitcoin, that's going to come to an end, and so I didn't miss out. I was just, I didn't get it, so can't win them all. And so I think there's a lot of people that are going to be stuck in there for a while. And I don't know if the Bitcoin number is 250,000 or a million, or at some point you start to have, even the most ardent Bitcoin skeptics have to take a hard look at this thing. And one of my favorite memes, which is like a hardcore Bitcoin meme, but I saw this over the last couple of months pop up in a few places, is it was like two concentric circles, and one was in one circle was the difficulty adjustment, which is the system whereby Bitcoin, the Bitcoin protocol automatically readjusts itself to keep the blocks being mined at an average time that is consistent with where the target is meant to be. And on the other side is thinks Bitcoin is a scam. And so basically the inside the two circles is anyone who understands the difficulty adjustment it's impossible to understand the difficulty adjustment and also think Bitcoin is a scam. And so, yeah, I mean, I think that, but that's fairly advanced. Like, you're fairly down the rabbit hole. If you've even heard the word difficulty adjustment, you're probably far enough that you own some Bitcoin and are you're well on your way. So that's not the average person, and the average person has no idea what that term means, and so yeah, I mean, we are early.
We are early, and we can look to our neighbors in the south to see maybe the Overton window shifting politically. It doesn't seem to be so unpopular to talk about these things as much. But up here in Canada, the candidate for the Conservative Party kind of went pro Bitcoin for a bit, and then there was a massive down price in Bitcoin, and he hasn't talked about it since. So I think you're right in that way, or I would look at that as an example of saying, like, somebody doesn't want to be wrong about this. They don't want to be embarrassed by their decision or promotion of something that they don't fully understand, or is too risky for them to like fully get on board with. So I think that there is some of that. And yeah, it's just interesting that there's something like this, though, that we're set in this time frame in history where we can be early adopters to this, where we can front run so many people that are very financially savvy. They spend their whole lives trying to make more money, to try to outperform all of this, and they're still missing Bitcoin in so many ways. It just seems pretty crazy to me that we can still front run so many people here with Bitcoin.
The one strong opinion I do have about Bitcoin, and I try to avoid massively strong opinions, is we're still like your room to front run is probably still pretty significant. So billions of people around the world have never heard the word Bitcoin. Um, there are massive asset classes that have trillions and trillions of dollars that could very easily be sponged by Bitcoin before anyone has even noticed that this thing has really started to accelerate. So there's, I think, a lot of attention on, say, the Bitcoin gold parity, which is still like 12 or 15 trillion US away. And, all of that wouldn't come from gold. It would come from probably a variety of places. But Bitcoin's a lot more than digital gold, right? Like we've been talking about, if it's truly a better store of value than real estate, I think real estate is like 250 trillion globally. And so, real estate's not going to go to zero, but what percentage of that 250 trillion is the monetary premium, to use your term? Like, how much of that is the extra fat that could be just easily sponged away? And it's definitely, a significant number. And so I think that, for people, the biggest, there are a few easy pitfalls to try and avoid right now with Bitcoin. And the big one, I think, is to well, I'll say there will be a lot of people who sell their Bitcoin at 2 or 3, 400,000. And if selling the Bitcoin is the right decision for somebody, then that's an individual thing. But I firmly believe that in the not too distant future, we live in like a 7 seconds from now society. So 8 or 10 years from now may seem like an eternity, but like there will be people who just won't believe that people had the opportunity to buy Bitcoin under $100,000. And there will be a lot of those people who will be like, I can't believe I sold my Bitcoin for $250,000 and now it's $10 million or whatever. The flip side of that is that there's probably a good chance that when that day arrives, your Starbucks is going to be $50. And this is the other problem, right? I think that we're thinking about Bitcoin returns or Bitcoin future returns, and we often really still tend to measure them in our dollar minds without thinking about what the future value of those dollars probably will be. And it's just this really weird problem to conceptualize, like I was saying about the top and the bottom of the fraction. Like both of those numbers are changing, and we've all lived in that world our whole lives, where what you're really doing in owning Bitcoin now, I would say, is I mean, for me, like, I'm long on the idea that this is an idea that makes more sense than the way we're doing it now, and that enough people over a certain period of time, and it could take 6 or 10 years, will also arrive at the same logical conclusion that this makes more sense than the current thing. And when that moment happens, you don't want to be the one who cashed your Bitcoin in for some paper.
I saw a meme the other day. It was a tweet by somebody years ago. They said, "Oh, Bitcoin just dropped to $270. I'm so glad I got out of this bubble." And then somebody replied to it years later and said, "Are you still alive?" And he said, "Alive on the outside, dead on the inside." And I think, and what I thought when I saw that is, I think that meme is getting created almost daily right now, like
Yeah.
constantly. People are making that comparison, and the numbers have changed, but in reality, if Bitcoin does what we all feel that it's going to do, that meme is constantly getting recreated with different people. And I really do think that it's going to be worth a lot more in purchasing power, nominally, of course, way more. All of this. And I do also see, though, we've talked a lot here about store of value. So I just want to get into the medium of exchange a little bit more with you. The Satoshi white paper, peer-to-peer digital cash, right? How important is it for Bitcoin to become a medium of exchange? Do you have any thoughts on this?
Yeah, and I'm glad you asked. I think that people are, you know, we want things to happen at a certain pace, and there's a really strong urge for really like hard takes on whether something is happening or not happening, whether something has succeeded or failed. I do think that medium of exchange is important. I think that what the bizarre part about it is that everyone who studies this stuff seems to universally agree and acknowledge that store of value happens first. And so I don't think it's reasonable to expect media exchange on a broad basis or to start wondering if it succeeded or failed until a large number of people have firmly agreed that store of value has happened. And I don't think we're there yet, and I don't think we're anywhere near that. So to me, if Bitcoin was 10 million per coin and people still weren't accepting it broadly, if merchants still weren't broadly accepting it, then I would say we might probably have a problem. But I think that until that time and until that happens, then the medium of exchange conversation to me is really like, it's great. I was in El Salvador in the fall, and spending Bitcoin is very cool. It's great to see early adoption, and I do believe Bitcoin's money. So it should be something that people use and view as money. There is an innate problem with something that people are buying um, just purely because they think the price is going to go up. But at the same time, like, I will say, I think that Bitcoin's killer app is this universal savings tool. And the reason then that people end up wanting to take it as payment for something is when everyone understands that, like, yeah, that's the one thing that you can keep because it's valuable. So, these things, it's a process. And so there's been a few different higher profile people over the last while kind of urging this, like, the urgency of medium of exchange. And personally, I think it's a little bit overblown. I think that Bitcoin has to get a lot bigger before we can reasonably expect to see more urgency around accepting it as a payment.
Yeah, I agree too, and I think it'll just naturally occur as more people begin to understand what it is and start to demand it. So there's kind of the theory of Gresham's law, which is what we're kind of seeing right now, where people are storing Bitcoin and spending fiat. So
Mhm.
they're getting rid of the bad money, they're saving in the good money. And then there's the opposite of that, which is Thier's law, which is people basically demanding good money instead of bad money. So I kind of see that as a natural progression. I think more and more people will start voluntarily accepting Bitcoin for payment, and then maybe there'll be premiums to the fiat payment or discounts to the Bitcoin, and there'll be just incentives will change where people really want to stop dealing with the bad money and just start dealing with the good money, and that will naturally lead to a medium of exchange, in my opinion. That's what I see happening in the future, at least.
Yeah, totally. I mean, it's like most people still don't understand that Bitcoin is a superior form of money. And you look at the recent by-election that happened in Vancouver. Like the city of Vancouver is has a generational opportunity to do something because of having the benefit of having a visionary leader that truly has grasped what's going on. And you know, it's totally fair to say that a decent percentage of the population of Vancouver has no idea what he's talking about, and for that reason, he may not be able to accomplish, at least in the short term, what he's hoping to. That would truly, probably permanently alter the course of the city of Vancouver. And so, this is just a perfect example. And Vancouver, of all the cities, coincidentally, Vancouver, of all the cities in North America, to be one to try it out, it would probably be the most obvious choice to be successful because of the number of merchants in Vancouver. There's a huge Bitcoin community in Vancouver, like all of these things. And, the average person still just isn't there. And, anybody who was voting liberal, these same people who were attacking the conservative politician who was talking about Bitcoin, people hear those bullet points and they became political lightning rod. This idea that people who were investing in Bitcoin would have lost all their money because the price temporarily went down. This is just people not doing the work and accepting that criticism as fact when it's obviously completely horseshit. Sorry, I didn't mean to. Yeah.
No, that's true. It's true. It's true. And shout out to Adam and Cole at Koinos for all that
Yeah.
merchant adoption in Vancouver. I also okay. So just one question here, and then I want to talk about a little bit about block rewards. So, what do you think is the most kind of like underrated or slept on idea about Bitcoin?
I think for listeners that are working their way through Bitcoin, this Lightning as a scaling solution for Bitcoin for me is a really fascinating application and a very cool part of what's happening in Bitcoin, because it's not a part of the original Bitcoin core, and it was a subsequent idea that was basically crowdsourced and has become a global payments network on its own. And I love I'm interested in talking to and sort of follow Lightning developers and Lightning development, because where I really see kind of Bitcoin going eventually is just like everything else in the information age. We're moving to a world where everything is streaming. And, for me, like doing my first Lightning transaction was a real light bulb moment for me in terms of like making Bitcoin real. And, paying for a coffee with that transaction being posted to the base blockchain is not feasible. And some of this, getting back to our earlier conversation about medium of exchange, like the base Bitcoin blockchain isn't meant to be the medium of exchange for the world. But what's happening on Lightning is really amazing. And this is another example, I think, where just because it doesn't have 100% success rate of payments right now, or it's not broadly accepted. This is another one where people are pretty early to kind of declare Lightning failed or dead, which to me is just completely insane. Because like, imagine that independently on their own, a bunch of random strangers got together and decided to build a global payments network with instant payments settled finally anywhere in the world. And it's taken more than 7 years, and people are disappointed by like the speed of this thing. It's totally crazy. I have my own podcast, and a couple months back, we did an interview with a guy named Jesse Schrader, and Jesse's company is called Amboss Technologies. It's a Lightning development company. And inside the Lightning network, you have channels, and there can be an issue with completing payments if there isn't enough liquidity in the channels to process, especially like large, high dollar payments. So this is one of the sort of fundamental technical challenges of Lightning. And Amboss Technologies is developing an artificial intelligence tool that automatically rebalances Lightning channels on its own. And it's like the level of human kind of ingenuity and problem solving that's going into working out how to make this thing a reality is totally astounding, you know. And if you get back to like this idea of ethical, you know, like it's solving the problem of giving everyone in the world access to ethical money, access to money that can't be censored or confiscated, access to money that works the same everywhere in the world. And I think that like that's, you know, it won't be a moment, it will just happen, but it will be the same, like, you know, for people who are remember what Netflix was like at the turn of the 21st century. Like Netflix was originally like a vending machine in your grocery store, right, where you would like get the DVDs out of a vending machine. And Blockbuster famously declined on the right to purchase Netflix, and because they couldn't see the application for what they were doing. And that's kind of like how I think about Lightning, is where behind the scenes people are working on this thing day and night all over the world, and merchants all over the world are already accepting it, and it does work very well. It's not perfect, but yeah, it's a very exciting technology and something that I think will really change everything about the way money works.
Agree. I think Lightning is a great complement to Bitcoin. And I think if we really look at it, it doesn't really make sense to use a broadcast network that is very data rich and very expensive to do small transactions anyway. It makes a lot more sense to have a channel system peer to peer within that, and then final settlement on that broadcast network. That just makes a lot more sense. So I think yeah, I think that's a great I think that's a great underrated part of Bitcoin, is the technology that's being built on top of Bitcoin and being integrated into Bitcoin. And we need Bitcoin to grow in all sorts of different ways to become more and more adopted. You know, UI and layer 2, layer 3, all this kind of stuff. I think all of that we'll figure out what works, what doesn't, what we do need, what we don't need, and all of that will just get worked out over time.
Mhm.
Um, Scott, I did want to talk to you a little bit. You're the CEO of Block Rewards. What is Block Rewards? And can you tell me a little bit about it?
Yeah, for sure. We are a Canadian Bitcoin startup focusing on helping people earn Bitcoin at work. And if you know, if you believe Bitcoin is a superior form of money, then to me, it's an obvious has obvious applications for both employers and employees. You know, I sort of mentioned at the start of the show, this was my background. It was in helping companies build their total rewards packages to make sure that at the end, the output was, you know, happy employees, employees that felt like they were being taken care of, offered things of value, helping them plan for the future. So I believe that Bitcoin is the most important financial tool any of us has access to today to think about long-term planning. And it's very true that people often get a nice boost in terms of like the discipline of saving for the future if it is something that it comes off of their paycheck immediately. So pensions and group RSPs in Canada are useful in part because it creates for people a means of forced saving. And so Block Rewards takes from traditional financial tools like our RSPs and pensions. Uh, we borrow some classic ideas with a new spin. And our launch product is called Bitcoin Savings Plan. It's basically the easiest way for an employer to offer Bitcoin as part of their compensation and rewards stack to their employees, or for employees to ask to be able to earn Bitcoin with part of their paycheck. And it's a customizable, flexible tool. So we have the ability to make it a voluntary opt-in program where some staff who are interested can just have an easy election for Bitcoin through payroll. And on the other end of the spectrum, you know, we want to help employers understand how this can really be like a game-changing opportunity for them for recruitment and retention by offering something that is just probably the most valuable thing anyone could offer anyone right now. So, and then somewhere in the middle is this idea of, you know, like in a pension or in a group RSP, the employer and the employee come together to match contributions and everybody wins. And that's kind of where I would love to see Bitcoin go. Is I think most people should be thinking about trying to save some of their paycheck in Bitcoin. And I think most employers should be wrapping their heads around why they would want to offer it. So what we built at Block Rewards is a tool. It's I believe it's the best tool available to employers in Canada to start thinking about this. I think it's like, in the 90s, there would have been a point in time where companies had to have a serious discussion about how they were going to approach using email in the company. And then very quickly, it would have turned into like a non-optional thing. Every company would have had to would be just using email. And it's different for people because now we're talking about a technology that relates to money, and there are already different products, and we're used to the way certain things look in the world of money and saving and investing. But ultimately, it's about finding the thing that goes up faster than everything else. And so ultimately, I think that the workforce will also converge on Bitcoin as the preferred tool for, really maximizing the relationship between the employer and the employee. So that's what we're up to at Block Rewards. I want everybody in Canada to have the opportunity to earn some Bitcoin and hopefully be rewarded in Bitcoin by their employer.
Oh, that's awesome. And that's exactly what we were talking about before this, where there's more tools and more technology built on Bitcoin. This is totally a type of technology that integrates Bitcoin, being able to connect that directly with employers, employees. I mean, this is totally something that's needed. So that's really cool to hear about that. Scott, I just want to thank you for being on this podcast. And if you wanted to direct the viewers to anywhere specifically, I'll post a link to Block Rewards website in the description, anywhere else as well. You mentioned you had a podcast. If you wanted to let the viewers know where to find that, now's the time.
Sure. Yeah. And thanks again for having me on. Our podcast is called The Block Reward, and it's on all the major platforms, including Fountain. You can find me on Twitter. It would be, I'm on Twitter as the handle is Lantern Bitcoin. And you can find Block Rewards or myself on LinkedIn. We're very active on there.
Great. Thanks again, Scott.